All right, good morning, everybody. Friday, we made it. So we got OpEx today. It's kind of a big deal. Seen the volatility trigger has been rolled down on the SPX to the 5700 level. That's been the critical line in the sand for spot gamma most of the week. It seems it's been the level they didn't think we could get through until at least OpEx, maybe even April 2 with the tariff deadline. And now we've got the volatility trigger on that same spot. Now, the volatility trigger is a little different than the put wall and the call wall. Those are a little more obvious on what they are. The volatility trigger is a proprietary measurement. It belongs to spot gamma. It's their formula that creates it. And basically, it's a level that below we expect those feedback loops where we see dealers selling into selling and we fall farther, and buying into buying where we run higher. And it's where volatility really begins to expand to where you see the VIX really start to take off. And of course, that triggers VC funds and automatic trading, a bunch of selling, CTA behaviors. So it's a really big deal. Getting above it implies that we'll have lower ranges, smaller ranges that dealers won't be necessarily forced to buy into buying or sell into selling. And we get a more normalized behavior with less volatility across the entire structure. So they consider it, if you want to read the volatility trigger page, it's public. You don't need an account at Spot Gamma to read it. They consider it one of the most important levels out of all of the levels that they offer: call wall, put wall, zero gamma. This one is their shining light. And the fact that it's been rolled down into that key 5700 level certainly gets my attention. I don't have the AM edition yet, so I don't know what they have to say about that particular level, but I just refreshed the page. I see that they got it out, the AM edition. I'll kick it down to you guys and kind of see what they have to say about it, but it's kind of a big deal. So I want to keep an eye on that. Other than that, we just need to make it through the day. Try not to give anything back. Focus on April 2nd, as it is the next big thing that really could change the entire quarter, good or bad. So we look at what's going on around the world this morning. Europe's down, small caps 0.5%, NASDAQ at around 1/4, the Dow same, S&P same. Hong Kong down also, but less than 1/4, closer to 0. It's funny, I'm seeing more and more analysts pointing out money in different nations, and some of the biggest banks that do ETFs, think Drexian, SPDR, right? The big ETF makers are starting ETFs in Europe. Why? Well, because countries around the world are suddenly getting all the trading that we used to get. So of course they want to offer them more vehicles to trade with. It kind of goes back to, are we going to come out of this mess anytime soon? Nope. Still need money coming back into the US first. So we look at Market Watch, nothing really big is scheduled today. The only thing that this page is good for is the biggest events. And if it's not that, and only in the US too, then it doesn't have anything. Taking a look at FX Street, these guys are way more nuanced. and they look at things that are happening from around the world, and they give you a little impact meter to help you gauge historically whether or not that event has caused volatility in the past. We can see we got Trump today at 11. We've got a couple of Fed speakers, Williams and Goolsbee. And that's pretty much all in the morning. So by the time we get to the afternoon, we could have a pretty decent afternoon where we just don't have a lot in our way. All right, so I mentioned the volatility trigger being moved down. On the ES, it's 57.75, but on the SPX, it's 5,700, and that level's been an important level. Just kind of jump over to the SPX for a moment, look at the daily. That 5,700, we've tested it 3 times. We haven't been able to keep it on any of those, just keep coming back down again. If we can get through there, then we've got this channel, and that's a channel with a gap close at the top, right? I know different analysts do this different ways, but if we closed there and we opened here, then that is where we have to go to close the gap. It's just the way I am, right? So if you do it different, it's fine, you do you. But we got to get into this channel, and then we got to close that gap. We have other gaps beyond that to deal with. Got another one up here because we closed there and we opened here and we haven't been back. But one step at a time. 5,700 is a very important level. It's a line in the sand. It's critical. We need to get through it. And then we can work on what's beyond it. You can see the 10-day here, 57.22. It's about midway through yesterday. So if we do make an attempt to run up and break out of yesterday's high, we've got to get through that 10-day moving average first. We've also got the 3-week moving average blocking our path. We would have to get through that as well. The path of least resistance is a downside breakout at this point. I'm not saying that we're going to take a downside breakout, just that is the path of least resistance. The cumulative delta this morning wasn't matching price action, especially this fade down. Cumulative delta stayed mostly sideways until like 3:30 this morning before it started to really get any movement at all, and yet price continued to fade. So we had a burst of buying last night when we came in at 6 o'clock. Cumulative delta picked that up, carried it about 26,000, and then just hovered. So there was certainly buying happening all night. Limit orders in control on the buy side, and yet price just continued to fade. They were getting their work done. And we're going to have an SPX options expiration at the open. Then, of course, we have the end of the day expirations on everything, and we'll be done with these H contracts, move into the M's. The ADR today, the average daily range, is so wide that if we're going to hit either side, we've got to break out of yesterday's price action. A lot of times that's not true, right? A lot of times we can hit one edge or the other because it's inside of yesterday's price. And that's not the case today. So if we want to get our average move, we have to get an inside day breakout. Now, on the other hand, I like that setup, or I like the idea of that setup, because I like playing the 111 or the 1236 off yesterday's range. It's one of my favorite plays. So that lines up for me. If we can get outside of yesterday's range, we get a 111 or a 1236. We end up hitting the ADR. That's a wrap. We call it a day. We're done. We go into the weekend. At this point, the biggest argument is what could cause us to break out and run today? What would cause them to accept all of that weekend risk and buy this thing up? It would have to be some really good news to convince money pile into this market when we're not seeing it in any other space. So I don't expect to see them take any weekend risk, and it's likely we even start to see them de-risk even more. So we're looking for a break out of this range. It's IX10, GTFO, get out the box. 5650 is the downside break on the ES. We break that, let's go to 5550. Get below that, we can get a nice expansion to the downside. Not all in one day, right? Pace ourselves a little bit. Today's floor pivot, very close to yesterday's pivot. It's actually inside the channel, so it's not bullish or bearish. It's more of a neutral state. Price opened underneath it. That is bearish. We've already hit the pivot, so it doesn't owe us any move to the upside to get that taken care of. Channel's a little wider yesterday than today, but this channel is not narrow enough that we would consider it a signal of a continuation on breakout. So even if we do get a breakout, this channel does not say that we should continue to run. The spot gamma is a gamma index. That's a lot of gamma words. Goes from a -4 to a +4. And when we're below 0, it's when we can see that feedback loop of dealers buying into buying and selling into selling. And when we're above it, we expect that to not happen. That if we break out and run to the upside, they'll be selling into that run higher. And if we break down and fall lower, that they would be buying into that fall. Right now, we're still at a -2.89. So, I mean, a little rounding, you could call that 2.9. You could be a little more aggressive and call it a -3. So we are still in negative gamma considerably. It's a pretty heavy negative gamma environment. We would expect dealers to sell into selling. So this kind of move that we saw, with that news out of Europe yesterday, or the move back up to kind of close that gap that we saw yesterday, that excessive exaggerated behavior is kind of like what we're talking about here this morning. So if we break down outside of yesterday's range, it is completely on the table to get another move like that. I'm not saying that's what we're going to get. My crystal ball is broken, but it's certainly a viable option. That would be the S1. It's not perfect with yesterday's low, but it's close enough. If we break below yesterday's low and we get through S1, then we start lining up on S2 and the weekly floor pivot, 5632 cog line. If you've done any pivot work and gone through, any sort of courses on using floor pivots in the SNR levels, there is a play that focuses on going from the S1 to the R2, right? Because it's what everybody likes, buy the dip. But it doesn't owe us that. It's not what it has to do. So if we get there and we break below it, we start to continue that drive to the downside, you already got the levels. We want to focus on this week's low first, and then that floor pivot second, and then an expansion below that third. All things considered, we've developed a reasonably tight range this week on the profile. I still contend that all of this is a combination of range that went for the last 2 weeks, run it up to the point of control on this higher side, maybe even a little overshoot of that. And of course, that can be adjusted slightly one direction or another, but all of this has just been a massive range with slight minor expansions, a little higher, a little lower, in like a kind of a choppy megaphone pattern. So we are expanding from here. It's following every playbook that we've ever seen when it comes to bottoming formations. This one's a classic. It still doesn't give us a roadmap to the future. Ten-day, 30-minute volume profile. We've almost taken out the last of those candles to the left. By the end of Monday, we should be looking at a much narrower profile if that 5760 holds and we don't get through it. It's 5760 here, but it's 5700 in the SPX. Still that line in the sand. So as long as that holds, we'll have a more narrow profile and we'll GTFO wait to get out the box. It's interesting to highlight that we don't have a ceiling in place yet. We are still above the point of control, and we are still primed for a move to the upside. We're not talking about recovery back to all-time highs or anything like that. Just likely 50% of the fall, maybe a little more in an overshoot. That'd be about it. No VPOC from yesterday. A little discrepancy this morning between the total number of trades, point of control 5715, and the total amount of volume 5698. Not sure what. I guess they were just defending 5700. Looking left, it wasn't the low of the day. Not here. Although we almost got the point of control moved down to the low end here. They built it out. It just didn't quite maximize it. I bet if we'd have looked at this an hour ago, that point of control was down here. But then we ran up from that low and we chopped it out enough that we moved it to this point. That would be my base case argument. Probably see it in a TPO chart. All right, we have a glimpse of next week's range. That doesn't help us in comparison to this week's range since it was a broken week. Best we could do is go back 2 weeks ago and look at what the range was and then compare that with what we've got on deck for next week. Now, next week's box, even though we can see it right now, it's not set in stone. It's going to continue to move all day today. And then after 4:15 tonight, it'll be locked. It won't move anymore. And that'll be our range for next week. It doesn't look like it's really much bigger or smaller than that week that we compared it to, this one here. So it's not greatly reduced or greatly exaggerated. Just seems to be a continuation of what we've been dealing with. %3 below the 10-week, but on the rise after being much deeper than that. We got below 4 3/4 at some point. So we're coming back. One of my concerns is that we're easing back rather than having really sharp reversals from these depths to back above the 10 in a single shot. So we can grind our way back. It's what we did back in the bear market of 2022. When we would get that deep, we would just slowly grind our way back up, and then we would go down again. We're not within its gravity yet. We'd have to get a lot closer to that. Still looking for a test of the 10-week, maybe even a chance to jump above it, close above it. We don't have any of that yet. .5% below the 10-day. That is within the gravity. We got really close to it, maybe even hit it. Now we're fading off of it a little bit, but being within its gravity, we can dip down or dip above, just back and forth, back and forth. It's when we begin to really expand away from it that it'll matter again. So right now we're just within its orbit. We got to look for that push away from the 10. And on a Friday like this, with OpEx and everything else, what is the catalyst to drive us away from that 10 on a Friday afternoon before the close? And remember, the day is half done already. I know you may not feel like that if you just woke up, but markets opened last night at 6 o'clock. It is past 6 a.m. Day is half done. So where does the fire come from to light us up and get us out of this box and away from that 10? I don't see it. The only thing that can do it at this point would be news, a catalyst of an unknown caliber that sparks the market. All right. So we can watch for that. That's not a big deal, but we can't anticipate it. So looking at what's up and what's down, China's down. Most of the top names on this list are all China so far. Then we get into semiconductors, gold, gold miners, home builders, home construction. We saw the yields moving around, and it's likely tied into that. Plus, that big move that we saw yesterday, that was on home news. That was fun. Take it when we can get it. Nothing else on the list. If we continue using the benchmark of 0.5%, all of these others aren't down enough. Mag 7, Bitcoin, XLE, they're slightly down, just not down enough. Transportation is in there. So either we look for them to get worse or to get an R2G. We don't talk about that one too often, but it's just like it sounds, going from red to green. It's a really nice trade setup. Looking at what's up this morning, the VIX. I mean, that's not really much of a surprise, but if we look at what Spot Gamma has been talking about with the VIX, the idea is they don't really think we're going to see a serious drop in the VIX until we get through the tariffs. So while it's possible that OpEx removes some of that, it's not going to take care of all of it. I just shared the AM edition in the chat if you want to get started on what they had to say. So this may be a really boring day, or we can just get lit up and make some crazy moves. We're not seeing anything in any of this that suggests it's going to be a crazy day. Everything says sideways, go into the weekend, keep what we got without burning it down. And that's what we need to see change. That can come from the Mag 7. It can come from options flow within the SPX. It can come from news. So you got those three sources. Technically, it could come from treasuries, bonds, that sort of thing. And that's not out of line either, considering what we've seen out of Germany, what we've heard from Europe this week with we had the rate decisions from Japan. Somebody could flip it in that space. So there's your trigger warnings to keep your eye on. Bonds and treasuries, intraday options structure on the S&P, the Mag 7, or news. At this point, we have none of those giving any warnings. We got nothing that says today is going to be anything more than just a quiet roll into the close. So be careful, watch the clock, keep your eye on the news, and I will see you all next week.